15 trends that show crypto adoption is on the rise. Because the blockchain industry is one of the most rapidly evolving, it is also highly susceptible to change and disruption. For example, between 2018 and 2020, the sector grew from $1.2 billion to $3 billion. According to projections, the market could reach $7 billion in value next year. This demonstrates how quickly the market as a whole is moving. It can be difficult to predict how blockchain technology and the market as a whole will evolve. Thankfully, we've researched 15 upcoming blockchain events for you to be aware of in 2021. 1. Companies will use crypto more increasingly. When PayPal announced in October 2020 that it would be facilitating the purchase and sale of cryptocurrencies, including Bitcoin, on its platform, it caused quite a stir. Furthermore, the service would allow users to pay for items with their cryptos by converting the purchase amount into the native fiat currency. This means that the merchant does not have to keep the cryptos, instead, they receive traditional money. This action by PayPal caused the price of Bitcoin to rise noticeably at the start of a rally that saw the flagship cryptocurrency reach an all-time high on November 30th, before quickly falling back below that level. Many other companies, including JP Morgan Chase and IBM, have begun to use cryptocurrencies in addition to PayPal. However, PayPal has taken the most significant step forwards by beginning to allow its user base of over 346 million people to access cryptocurrencies. This move, along with the increased value of Bitcoin, should set a precedent and increase other businesses' willingness to use cryptocurrency. 2. DeFi's expansion will continue. Decentralized Finance, DeFi, has risen to prominence this year, with many proponents of the concept believing it can beat the banks. Even if this technology does not live up to the hype, the technical and user benefits are compelling. DeFi is a type of finance that does not require the use of middlemen such as banks or exchanges, and agreements are enforced using smart contracts. DeFi has grown in popularity due to its use cases, which include leveling the playing field between lenders and lendees by democratizing the lending process. For example, there will be no need for credit checks with DeFi lending, which means that more people will be able to get finance and lenders will be able to earn higher returns due to transparent dealings and the absence of a third party. Furthermore, DeFi has given rise to decentralized exchanges such as Uniswap, which are trustless platforms that allow users to trade assets without the need for a third party due to their shared ledger operation. There is no need for central management for these exchanges, and there is no single point of failure. DeFi was growing at a rate of $500 million per week in August 2020, demonstrating the concept's growth potential, and it will not be surprising to see DeFi continue to grow in 2021. 3. Crypto casinos will become more popular. The rise of so-called crypto casinos has occurred recently, owing to the fact that casinos benefit greatly from providing cryptocurrency services, such as payment and payout in cryptos. This is due to the fact that it exposes the casinos to a whole new group of potential customers, who are more likely to play their games and use their services. Furthermore, the use of cryptocurrencies in online casino platforms will benefit users because the increased security of crypto wallets ensures that all transactions are secure, and transactions that would normally take days to process can now be completed in less than 15 minutes. One reason for the decline in the popularity of online casinos is that customers' current payment methods are inadequate. Because cryptocurrencies can help to change this, casinos are likely to increase their focus on cryptocurrencies in 2021. 4. Bitcoin's ascension is likely to continue. As previously stated in this article, Bitcoin recently reached a new high, causing a media frenzy. The increased adoption of cryptocurrencies, particularly Bitcoin, by businesses is expected to boost the cryptocurrency's value even further in the coming year. It was recently revealed that a Citibank analyst predicted that Bitcoin would rally again in 2021, reaching $318,000 per coin in December of that year. This figure appears unlikely, but using the stock-to-flow forecast model, even more conservative estimates predict that Bitcoin will reach $100,000 in 2021. Even if none of these predictions come true, it appears that Bitcoin's price will continue to rise during 2021. 5. The use of cryptocurrency as a payment method is growing. We previously discussed how PayPal has paved the way for payment providers to allow their customers to buy and sell cryptocurrencies, as well as pay for things with those cryptocurrencies. More payment companies are likely to follow suit in the future, but this isn't the only way crypto will gain traction as a payment method. Cryptocurrency ATMs, which allow people to withdraw cash using their cryptocurrencies and also make deposits in cryptocurrencies, have begun to appear in large numbers all over the place. For example, there were 4,213 cryptocurrency ATMs in the United States in 2019, and this number is expected to exceed 9,000 by 2020. The adoption of cryptocurrency ATMs does not appear to be slowing down in 2021. When combined with new infrastructure from online payment providers, cryptocurrencies will become much more widely accepted as a payment method. 6. Bitcoin systems may be upgraded soon. It was announced earlier this year that the Bitcoin blockchain would eventually be updated using the Taproot/Schnorr code. Originally, it was hoped that this upgrade would be available in 2020, however, it now appears that the upgrade will be completed in 2021. The code upgrade is being hailed as a way to improve privacy, allow the technology to scale more, and facilitate the increased use of smart contracts. The Bitcoin blockchain is open source, which means that anyone can create and review proposed changes to the blockchain. The new code was merged into the Bitcoin core library in October, but it is unclear how much time will pass before the actual upgrade takes place and provides benefits to the Bitcoin blockchain and its users. The development of more flexible and effective smart contracts, along with increased scalability and privacy, will be a huge boon for cryptocurrency, and you should definitely keep an eye on the progress of the upgrade over the next year to ensure that you don't miss out. 7. The public's trust in blockchain technology will continue to grow. It is safe to say that when cryptocurrencies and blockchain technology first became widely known, many people were skeptical and distrustful of the new technology. This is due, in part, to opportunistic ICO scammers and other scammers who attempted to take advantage of people's interest in blockchain and cryptos. Fortunately, people have become more aware of crypto scams, and fewer people are losing money as a result. In the aftermath of the cryptocurrency boom that year, as previously discussed, many people saw cryptocurrency as a bubble and a passing fad that would last only a few years. However, 55% of business owners believe that blockchain technology will be critical to their organization in the next 2 years, and individuals, particularly millennials, are becoming more trusting in the future of cryptocurrencies, with 60% of them being familiar with them. It is very likely that public trust in blockchain and cryptocurrencies will increase further in 2021, bringing more people into the market. This increase in trust should also aid in further market growth, which is beneficial to all parties involved. 8. Blockchain will be recognized in ways other than cryptocurrencies. Unsurprisingly, when it comes to blockchain technology applications, most people immediately think of cryptocurrencies. As a result, it may surprise some people that the technology's organizational applications are much broader, and it is likely that as more businesses and other organizations use blockchain technology, more people will become aware of its inherent benefits. For example, blockchain technology has a lot of potential in accounting and auditing because records can't be changed once they're created, which greatly reduces the possibility of fraud, and the secure nature of the technology eliminates the possibility of human error. Furthermore, the blockchain ledger can be used to track the movement and location of items as they move through supply chains, making them more efficient. Over the course of 2021, more blockchain applications will emerge and be adopted, while existing ones will receive increased attention. This means that people will be less likely to believe that blockchain is only useful for cryptocurrencies and that it has no other applications. 9. Stablecoins will reappear in the news. Stablecoins have been around the block in the cryptocurrency sector for a while now, offering an alternative to other cryptocurrencies that are less volatile and, as a result, have a lower risk of crashing. Stablecoins have been widely proposed as a solution to the problem of high remittance and other fees for transferring money across borders, as well as the length of time that these transfers will take. A big fish in the news right now is Facebook's own upcoming cryptocurrency, Libra, which was set to launch in January 2021 as a stablecoin pegged to the US dollar. This move exposes stablecoins to Facebook's massive 2.7 billion strong user base, potentially attracting a large number of these people to the blockchain market and stablecoins in general. The media hype surrounding stablecoins has slowed in recent times, but the potential for altcoins in 2021, as well as the media hype surrounding the launch of Libra with Facebook, should be enough to catapult them back into mainstream discussion. 10. Central bank digital currencies planning will be accelerated. Central bank digital currencies, CBDCs, are a type of asset that employs blockchain technology to create a digital token pegged to the value of the national currency, or regional currency in the case of the euro. These currencies have been proposed by organizations such as the Bank of England, Russia, China, and, most recently, Saudi Arabia and the United Arab Emirates. As of now, only a few countries in the world have created their own cryptocurrencies, including China, Singapore, Senegal, and Tunisia. These currencies have been proposed for a variety of reasons, including increased digital currency transfer speed and lower cross-border money exchange costs. Countries will not want to be left behind when it comes to CBDCs, so you can expect to see a lot of news and development relating to CBDC adoption around the world in 2021. 11. Rug pull scam prevention methods will become more common. The presence of rug pull scams on platforms like Uniswap is possibly the most serious issue plaguing the DeFi market. In these types of scams, the scammer will create new tokens for a project and offer or airdrop some of these tokens to increase interest in the project and gain more investment and liquidity as the token value rises. The scammer will then withdraw the liquidity from the exchange platform, essentially taking the money and fleeing. Fortunately, there are companies working on ways to prevent rug pull scams from occurring. One of these companies is Locked Liquidity, LID, protocol. They enforce liquidity locking on exchanges through advanced smart contracts that release over time or when a certain threshold is reached. This keeps scammers from pulling the rug out from under investors and allows them to keep their money safe. More methods of preventing rug pull scams from derailing the rapid growth and progress made by DeFi projects on decentralized exchanges such as Uniswap are likely to emerge over the next year. 12. Significant steps will be taken to regulate cryptocurrency. Regulation of cryptocurrencies and other forms of tokens has always been behind the times, owing to the slow legislative processes found in many countries, as well as the rapid advancement of technology and funding methods in the sector. In a regulatory sense, lawmakers have previously compared the crypto market to the Wild West, and it does not appear that it will be long before regulation becomes more fit for purpose. The European Union intends to pass comprehensive cryptocurrency legislation by 2024, and the United States is rumored to be considering new regulations governing cryptocurrency wallets that would reduce the AML threshold from $3,000 to a meager $250. This is for transactions originating outside of the United States or entering the United States from another country. Even in Russia, the government has proposed that cryptocurrency wallets that transact more than 600,000 rubles per year report transactions and balance information to tax authorities, and that offenders of the new laws face harsh penalties. This indicates that in 2021, crypto regulation is likely to take significant steps, either to the benefit or detriment of the sector. 13. The number of crypto wallets registered will skyrocket. Crypto wallets are an essential component of the blockchain and cryptocurrency ecosystems, allowing users to store and transfer their cryptocurrencies in most cases seamlessly and safely. The number of registered cryptocurrency wallets has naturally increased in tandem with the asset class's popularity and trust. It is estimated that there will be over 55 million blockchain wallets in circulation by the